Welcome from Wall Street, where there is a lot to report. The S&P 500 has rallied to close at yet another new all-time high. Brent crude futures have actually managed to close the day below $70 a barrel. That's the first time that's happened in this big sell-off. And perhaps most importantly, the dollar on a trade-weighted basis, as we're now showing you, has broken through to a new post-2009 high. It's getting very close indeed to its highest level since 2006. That's obviously showing very impressive optimism, particularly on a day when shares in companies like Amazon performed very poorly here, showing worries about the US consumer. That's got something to do with the US, but it's perhaps got a lot more to do with Europe. We hear from the ECB on Thursday. As we saw from the ISM data earlier this week, the Eurozone economy looks extremely sluggish compared with the US. And I would say there is now growing belief not only that the ECB will resort to QE, to outright purchases of government bonds, but they could even directly commit themselves to it this month. I've seen a lot of that in research in the last few days. Now that seems to me to be a bit of a stretch, but it does suggest that the odds on a hawkish surprise from the ECB, that people will on balance be unhappy that the ECB has not done everything that is expected of them, the odds of that are now looking uncomfortably high. Not only that, once the ECB is over, we'll have another test of the extremely strong dollar and the weak euro when we get unemployment data for the US on Friday. It's a very intriguingly poised moment, but for the time being, plainly the hypothesis that the US rules continues to rule okay.